Good morning. This is Trading Bitcoin by Tone Vays. I'm Leah Wald, and I'm going to be doing QA this morning. Stop laughing at me. Tone is in Vancouver. Tone, how are you doing?
I'm good. I'm good. I'm laughing because we practiced this like right before the air.
Okay, I'm still waking up. I'm not a morning person.
You're still waking up. It's like 7:15 in the morning where I am, and I got in like really late last night because I got stuck at immigration in Canada of all places, coming from the U.S. So let's just say I'm already pissed off at all the Canadians. So seminar is going to be fun in about an hour. All right, let's go straight to screen share. I don't have any wise comments for you guys today. And Leah is here to help me out with questions. Let's hope they're more intelligent this time. All right. Oh, not sure why I'm starting there. My usual disclaimer, educational tools. Please learn trading. Haven't said this in a while. Probably a bunch of new people here already. Probably lost a bunch of people, which I don't know if that's a good thing or a bad thing. Let me do it. Okay, wait. Let me make sure we're live. 1 second, guys. I'm gonna get myself situated. All right. Let's hope the live chat's moving. And it is. Excellent. All right. We're all set. Okay, please check out this section. It's a free resource for you to learn how to be a more competent trader. Sections 1 to 5 are all very traditional trading. Section 6 might be new to a lot of new traders, a lot of new crypto traders. This is the stuff that I focus on. I call it time analysis, known as the sequential system, and some people call it the random number generator. My consulting section will be updated soon. This is not free stuff that if you need more help hands-on, and if you really need help hands-on, check out the trading seminars. Probably should be calling them trading workshops. I like that better. So maybe I'll reformat everything. But there's one today in Vancouver. So that's where I am. This is why this is going to be a little bit shorter, because I have to get there because there'll be people waiting to learn how to trade. Didn't max this one out, unfortunately. I think I'm going to have about, I don't know, well, less than 20, that's for sure. It's also a terrible weekend. By the way, I'm never flying on this weekend again. As I learned when I got to the airport, in Newark Airport, which I always like flying out of because it's usually empty. I got there. So this Friday was A, Passover, B, Good Friday, and C, what do you call it? Kids on their spring break. So I literally hit the trifecta. I was on a phone with someone that was like, oh, how was it at the airport? And I said, it reminds me of that movie Die Hard 2, because that's how many people there were at the airport at the time. It was like impossible to get a seat, or like barely standing room. It was crazy. All right, let's get to the charts. All right, so as was briefly mentioned yesterday, I believe it was yesterday, or the show with Tyler. I'm not even sure when we did that. I think that might have been yesterday or Sunday, or Friday. Anyway, we did bounce off the 50-week moving average on the weekly chart, which is somewhat expected, even though we're still remain fully in a bearish environment, right? So I see this as a very minor bounce. So, and as I said in the last video, I was expecting more of a consolidation in this area of 6,500 to 7,000, the way we sort of consolidated around 8,000. So that's what I was actually expecting. And the weekly chart remains bearish. So today's Saturday. We have, I don't know, about 36 hours to go upon the closure of this candle. And unless we bounce all the way, beyond 7,600, so unless this candle ends with a shorter body than the wick, this candle is going to remain completely bearish into next week. So not much to say on a weekly candle. The daily candle has bounced us a little bit. I mean, the last time we did the show, we were on yesterday's candle, you can see how yesterday's candle has a big volume spike. It does have a little bit of a tail. It has a little bit of a wick, but this is not what I call a screaming reversal candle. That body needed to be bigger. And because there was a wick at the top, this body actually needed to be green in order to be considered any kind of a reversal candle. In addition, the current candle that we are working on has not broken yesterday's candle's high. So that means even though today's candle is green right now and is a bit bullish looking, I am not, I'm not a bull here at the daily chart by any means. At the least, I would need to see a high higher than yesterday's high. So to be more specific, it needs to, the current candle needs to start trading above $7,270 on Bitfinex. So adjust for your exchange accordingly. Ideally, you want this thing trading on, let's say, 80% of exchanges need to be showing you a higher intraday high today versus yesterday in order to consider yesterday's candle, a confirmation of its reversal candle stature. And I don't even see yesterday's candle as a reversal candle to begin with. So the picture remains overall bearish. Now, as you guys know, I love my sequential counts, right? So we are now on an 8 of 9, and 9 is usually where we start to level out. Now, a 9 could come on a bounce to the upside, like we saw over here back in February 7th. You saw the giant reversal on candle number 8, and then candle number 9 at one point was already trading all the way up. We pulled back by end of close, but we continued going up. So a 9 candle could come significantly off the lows, as we've seen recently. And a 9 candle could also be a very disastrous candle. Like, just because you are getting a 9, it doesn't really do or say much for what's to come. But it does help you. At the least, it helps you get out of your bearish trades, assuming you enter those bearish trades correctly. Also, identifying what kind of a 9 it is will help you move forward. Some 9s are straight up reversals, like what we saw in February. Some 9s are short-term reversals, 1 to 4 candle reversal, or a stabilization and then continuation of a trend. And some 9s just get totally ignored and the trend continues. I believe this is one of those 9s, and it's a little too early to tell. We don't even have a 9 yet, but I believe this is going to be one of those 9s that gives you a little bit of a bullish bounce, maybe back to that $7,600 area over the next 3 to 4 days. Then we're going to fall back down and consolidate around the $7,000 area. Once we start consolidating in the $7,000 area, it will be no different than consolidating in the $8,000 area, just getting ready for another leg down. So I don't really see anything bullish here. The best bullish thing I can think of is, I got to talk about the def cross. Shoot. So there's two bullish things I can think of. Actually, they're both one and the same. We are significantly lower than the def cross. This is a terrible. I mean, the def cross is a def cross. It signifies that the future is not very bright. However, some def crosses are tradable to the downside and some are not. This is one of those def crosses that is not tradable to the downside. If we had pulled the price up into the def cross, this would have been a beautiful, perfect short trade. However, when the def cross happens and your price is significantly below the def cross, that usually spells a terrible short trade. In fact, it's a better long trade into the dead cat bounce trend. So a possible scenario is for us to rally here into the trend line crossover, which could signify I mean, your moving averages will also move into this cross. This could be a giant, this could be a very beautiful shorting opportunity if we start rallying into the moving average cross, which also, you know, bunches your moving averages together. I'm not sure how the moving averages will react over the next, you know, 2 weeks, but it's possible that the moving averages could get stuck near each other, and or at least the 200-day would be significantly, or would be above the moving average, the trend line cross, and the 50-day would go right into it, and then you can bounce into the 50-day, into the cross, and then there will be a monster drop from there. So from a technical perspective, that's kind of what I'm looking at the moment. I actually want to Google that for you guys. So if I showed this once before. So if I do, you know, moving average crossover, and I go straight to images, I'm just going to grab a random one, one that I like. Yeah, something like this. This is actually a picture that I might be using in my presentation. So here, when the moving average pulls into the cross, that's a good short opportunity. When the moving average drops into the golden cross, that's another good buying opportunity. When the moving average goes below, when the price goes below the moving averages, pulls into the depth cross, that's a good shorting opportunity. But right here at the last one, the price is significantly above the golden cross. So this is not a buying opportunity because they tend to pull into the cross. Like something like this is a very good shorting opportunity, and something like this is more borderline. Because you don't want to be too extended you don't want to be too extended above or below the cross. Okay, so yeah, here's another good example, right? You want price bunching into the crosses, and then from here you want to short it. But if you're already way down here when the cross happens, that's no good. That's not a trading opportunity. Okay, very briefly, the 4-hour. I mean, the 4-hour gave you a reversal candle. It would have been tricky because it was a red 2 after a red 9 telling you to go short here. So yeah, this probably would have been a losing trade. That's why you got to get out of these things kind of early when they go against you and cut your losses short. But yeah, I'm not going to spend too much time on it. You got a 9. The 1 to 4 candle correction didn't come on the 4-hour. It started trading lower, giving you the impression that you're going all the way into a 13 countdown, but then it reversed off of this reversal candle. So you got to adjust accordingly. Here is the 1-hour chart. We're going to look at the 12-hour chart first. The 12-hour chart has been fairly good in connection with this indicator. And you can see how this was another 9 that at this line, and this line I would have talked about, hey, you short below this line. Now you don't even have to wait for a 2 below a 1, and then be careful anytime the green arrows show up. And here is the combo 13, and we have reversed a little bit, still on a red 6 though, right? We can still get to another 9 here. All we have to, the 9 candle simply has to close below the 5 close, but 8 candle is going to be tricky because it needs to close at a new low. Because the 4 gave you the low. And finally, the 1-hour. The 1-hour is totally useless right now. So let's ignore that. I'm not going to look at any altcoins, but I will once again point to this article by George Salmon from 2015, January. I wrote it about 3 days before the big drop in the price of Bitcoin. When will the price of Bitcoin bottom? And he talked about what capitulation means. And then he actually took a look at this picture, right? And so he viewed it a little differently. I mean, different people have different ideas of what capitulation is. I guess he's probably correct. Capitulation takes place before the ultimate low. I kind of treat it almost as the ultimate low. So for me, the capitulation was going to be next. He basically called this capitulation, and then he called this despondency, and like the big drop. So it is kind of possible that if you go to the daily chart of Bitcoin, we did have our capitulation moment in early February, but we're still possibly about to hit a lower low, what is referred to as despondency. And again, just check out this article. It is excellent. So capitulation, then despondency, and it's debatable whether the price makes a low here or here. I mean, the way George wrote it, the price makes the ultimate low here, and he's probably right. So that's possible. No, then again, you don't know if we actually had capitulation already. We could still have capitulation, then bounce, and then despondency, taking us even lower, because we're still at about 7,000, and my ultimate possible low is 1,300. So it's possible that we have not had both of these yet, or it's possible we had capitulation already, and we just need that secondary low, give us some divergence, give us, a slightly less volume, because you can also see it in his picture here, where the volume spike is higher during capitulation points here. The volume spike is a little lower, but the volume spike here is wider. So that's also makes a difference. All right, on this note, I don't have that much time, so I'm pretty much done. Leah, can you find some good questions for me? And I just want to remind people that if you like my work and you want to keep supporting it, please check out the affiliates and referral section of my website and use these links if you are interested in any products. And a lot of these are discount codes. All right, over to you.
Is it possible to start a bull market without having a capitulation first?
Yes. And for an example of that, we can look at gold. I'm not gonna pull up the law. I'm just gonna make my life easy. And I actually dropped all of, this is gonna kind of suck because I removed all of my ad blockers, and some of these sites are just so annoying. Here, I'll show you, but they're usually long-term things. So if I look at gold, and then I look at gold on, let's say, weekly, and that's probably not going to be enough. I might have to look at it on monthly, right? Like here, actually on weekly as well. Like here, you can see gold could have bottomed. It looks like gold did bottom. I mean, I was still skeptical at the gold bottom because it doesn't bottom like it normally does. But you can see how gold bottomed in late 2015, and there was never actually a capitulation moment. It kind of, this was a very weird bottom. That's not how things normally bottom, but that's not new for gold. If I go to the monthly chart, you can also see how gold bottomed for 4 years by just sitting there. There was never actual capitulation. So yes, it is possible, though not very common. Like if I go to other futures, like for example, I don't know, even like something like coffee, you see there it is. This is how things normally bottom. This is the daily chart of coffee, though I should probably zoom it out to a weekly chart. And again, this is definitely capitulation because that's a big percentage drop at the very end and then a straight upshot. So things usually bottom with capitulation or like a slow long-term death or people forgetting it. But it happens, but not very common. All right, next.
Does the angle of the way one moving average crosses another moving average influence your opinion on the chart?
Good question. Damn. Not really. It doesn't influence my opinion on the chart. It makes it, it just makes it more difficult to enter trades. For example, I would have loved to see a moving average crossover right at this arrow. And when I drew this arrow, I almost expected it to cross there, but as you can see, the 50-day just flattened out, and it crossed yesterday. So it just made it more difficult because you can see that there isn't much difference between it crossing here and it crossing here, but it crossing here would have gave you a beautiful short trade. And even though I was still able to, pretty much perfectly predict where this thing would reverse once it did not fall apart back here on the 18th, I was able to say, hey, if it doesn't fall apart in the 18th, then it's definitely going to fall apart here at the crossover, but there was no crossover. So if there was a crossover, it would have been just a lot easier to manage your trades. That's all. So it doesn't change my opinion of what's going to happen in the future, but it makes trading a little trickier.
Is the 25 moving average and 200 moving average a death cross too?
Pretty much. Like basically anytime a lower moving average crosses beneath a longer moving average, it's technically the idea of a death cross, but it wasn't popular in the traditional markets unless it's a 50 over the 200. But in reality, it's just a term used for a lower term moving average, a lower length moving average, like a 50, a 25, even like a 49 crossing below the 50 would technically be a death cross. It's just not one that anybody cares about. The one that people care about the most is 50 over 200, but who knows if that's the best one for Bitcoin. It's just something that traditional traders follow a lot in traditional markets.
Do you think the downtrends have anything to do with the influx of institutional capital rumored to be coming in May if they want cheaper Bitcoin upon entry to the markets?
No.
Do you,
No, that's it. No. Everyone keeps sending me that conspiracy article about fourth dimension of Bitcoin. I didn't read it. I looked at that chart. I mean, guys, come on. Unless you were, this is ridiculous, right? Like everyone was accusing Bitfinex for all of his conspiracy theories of, oh, he sold all of his Bitcoin at like $3,000, and now he's hating on Bitcoin, blaming manipulation, why it's rising to 20,000. He's the conspiracy theorist. He's the conspiracy theorist that some kind of powers that be are driving Bitcoin all the way up to 20,000 from 3,000. So everyone is happy when it goes up. Once it starts going down, someone like Bitfinex says, see, this is what it's supposed to do. And then everyone else starts with their conspiracy theories as to why it's going down. Come on, guys, don't be gold bugs, please. Like, it's going down because it got too high. It's going to go up because it's going to get too low and people are going to, be scared. It's just what markets do. There's no manipulation. Now, you can say that, what do you call the plunge protection team of Federal Reserve and Treasury and whoever else is in there, props up the stock market. And I will tell you, yes, but it's not a conspiracy. They have been given, the green light by the U.S. government to maintain stability of the stock market. And stability of the stock market means the stock market needs to go up. So it's not a conspiracy theory. It's their job. But all of these things that like some kind of forces, like it's no different than aliens are driving down the price of Bitcoin. It's going down. And people always used to hate on me when I said, hey, when the spam stops, we're going to really see how useful Bitcoin is based on its mempool. And when the spam stopped, the mempool was bone dry. So that told me no one's using Bitcoin. So yeah, we're going to go down for a little while. Just go back, read my articles from 2014. They're as relevant today as they were then. Like if I grab like an old article back from 2014 during the bear market, let me see here. Here I wrote, don't blame the bear whale, right? Like for why the stock market is falling. Like a lot of my oh, I guess this one was written after the capitulation time. Should have grabbed one a little bit earlier. Well, here. I wrote a don't panic article, probably because the price had dropped. Yep. I mean, look, I was writing a lot of articles calling for lower prices, and people did not like me at all back then. There was one of these pictures where like a bear is sitting in front of a classroom full of bulls and pointing to the blackboard, and on the blackboard there's a big header why the price is going to go down, and there are all these bullet points, right? And people were screaming manipulation then too. I mean, nothing's changed. I wonder where that article is. No, it's a BitMax article. Anyway, scroll through it. There'll be some really like bearish cover art on there. Intro to Time Part 1, Intro to Time. No, that was Intro to Time Part 2. I don't know, this is, oh no, I know that's not it. That's Intro to Time Part 1. But yeah, anyway, let's move on. I don't have much time to reminisce on the days of 2014.
Off you go. Go teach young students.
All right, awesome. Thank you. Yes, it is time for me to go. Thank you very much, guys. Thank you for tuning in. We're closing out with 1,000 live viewers. Good luck trading out there. I am looking for some consolidation. The higher level time frames are bearish. The lower level time frames are starting to get a little neutral. Of course, a bounce back to the upside is always possible, but at the moment, not very probable. Thank you, Leah, for helping me with questions and being up early on this Saturday. And I will see you all on the next one, though not sure when that is. And bye, guys. Thank you.
Bye, everybody.